Hello, it's Aisha Price with Loudoun County Public Schools, and we're in Business Bootcamp 2, and we are talking about business tax deductions. So, a lot of business owners always ask me, Mrs. Price, what are some things that I can deduct from my taxes? And I'd love to talk to you about some of those. So, first of all, when you are a business owner, you do get that 20% income tax deduction that's taken off of the income that you receive. Um, Another thing that sometimes we don't think about are items we use every day, right? Like our vehicles, our meals, travel, um, different business meals, business interest expenses that we pay, maybe a home office expense. So those are things that we do all the time, right? Our utilities, things like that. Some things that individuals don't know that they can write off are things like their mortgage interest, right? So portions of your home expenses, you can write those off for your business expenses as well. Also, cell phone, portions of your cell phone, any mobile applications, of course, technology, office expenses, software supplies that you use, you can write those off. When it comes to like your business vehicles, they do ask you, is there a percentage of the time that you use it more for business or personal? And just be honest and put in the percentages, and it will add up and take out the amounts that's allowable for you. Mileage is another one that people don't use, and we'll talk about that one too. Startup and organizational costs. So, your first year of starting up your business, when you register your IRA and your SEC number for your business taxes, it's going to ask you, when did you start up, the first day of organization, and it's going to ask you any expenses that you incurred. And so those expenses that you incur for your business, you can write those off as startup costs for your business for the first few years. They made a new rule where they go back a few years. So each year they keep changing that. But yes, you can technically write it off for the first year and the year thereafter, the year before, any of those startup costs. Okay. Then we don't probably know unless you're a business owner, that there are SEP, self-employed IRAs, and things like that that you can contribute to, and you can create those different accounts through financial advisors. I have a great advisor if you need one, and then health savings accounts. You also get access to those as being self-employed. And you would write those off just as if you were as an employee for like federal excuse me, savings accounts. Um, Labor costs for services of employees and contractors that are W-4 and W-9 employees for you, and cost of goods sold, selling costs, any direct labor, manufacturing overhead. Some of those things go into play when you're writing and doing your taxes. There's a calculation. And then you have ordinary necessary expenses. Another thing we talked about, like I mentioned, work or business meals while on travel. They do not allow for alcohol and things of that nature, but you do get to write off business meals while on travel, work or business travel reservations, sometimes the lodging. You don't get to write all of that off, but if you're doing a business trip, you do get to write and include those type of expenses in there. Transportation, for work, business meetings, business meals. I mentioned that as well already. Business interest expense, property interest expense, dividend expense. We already talked about the cell phones and any mobile apps that you use for your business. um, and then if you do, say for example, you're working and you are having your business at the same time, when you're submitting your taxes, of course those taxes are going to go under one umbrella, and it's going to look at the income, the AGI, adjusted gross income. It's going to look at that, but it's going to take into account, when you put in your business expenses, it's going to take into account the business expenses as well as the business income. The business income will count, of course, as income, but then it will negative out the business expenses. So that's why it's important for you to understand some of these expenses. Some other expenses that people don't understand is, say, for example, you work for a company and you use your cell phone. These are going into like personal expenses, cell phone expenses, mobile apps that your company does not reimburse you for, unreimbursed employer expenses like technology, office expenses, supplies. Sometimes wardrobe can be included in that, depending upon if you have a strict dress code, and any professional subscriptions or subscriptions for clubs and things of that nature for employment. So some of these are like personal as well. Um, any major asset purchase, that applies to business too. Any upgrades you're doing to your home, efficiency usages, and if, say, for example, the office that you're utilizing for your business is going through some sort of renovation or upgrade, you can write those. If you do some sort of efficiency usage upgrade, you can write and include those. The square footage of the space you're using for your business, you can write those as well off. And any professional services, consultation fees for lawyers, tax preparation, maintenance, warranties, business gifts, and things of that nature. All right. Now let's go into like personal expenses. We are in a business class, but sometimes people don't understand that when you submit your taxes as a small business owner, normally if you did an LLC, you did an LLP, or you did a sole proprietorship, even if you did an S corp or C corp, and depending upon how you chose to do the taxation, your personal taxes, of course, and the deductions that you picked, and your business taxes, those deductions are looked at separately, but your income that you acquire from your business as well as your personal income is all counted in one kind of pool for your AGI. And then how they reach the adjusted gross income, just how they do for personal tax deductions, is they negative out any of these deductions that you have, right? So that happens the same when you're doing your business taxes. And when you do the application for the personal and business taxes, you pretty much do them together. And there's a section for business, a section for personal. So you'll be able to separate all of your different expenses that you will inquire. Personal tax deduction expenses do kind of go hand in hand. And the reason why is because you're going to, some of these are going to offset, right? So we know that you do get a standardized or itemized deduction for being for your status, single, married, or if you're doing married, filed jointly, things of those nature. So depending upon your, tax deduction, of course, that's going to change depending upon what you pick. But the preferred method is the standard deduction. You do get a higher deduction for standard. We are in a progressive tax system, so that's why when we talk about the adjusted gross income, it's important to have as many of these different deductions that you can allocated for, so that we can reduce your adjusted gross income and reduce the tax that is imposed on you for the income tax. Um, all right. And so some of these, of course, we know the different statuses: head of the household, married, single, joint, filed jointly, or separately. Okay. I talked a little bit about the AGI already. Personal property tax for your home, your vehicle, real estate, your boat, motorcycle, primary and rental properties. Rental property, you can only put in different expenses. But if you have a second home, things of that nature, that would where the property would come in to play. Home office deductions for your home office based, if you have workers or if you have business transactions that go through that space, you can count that as a home office deduction. Some other things, like I talked about, when we look at the business tax, they do ask you, do you use a portion of your home for your business? And that's where the mortgage interest and utilities calculation will go into play. And they'll kind of ask you what's the percentage of time you use this property for your business. And when you do that, it creates a lovely calculation and write some of those expenses off for you. Charitable and nonprofit organizations, schools, university donations, that's also for business as well. If you were to do those, you can write those off. But we know for personal taxes, that's a really high dollar per dollar write off 401k IRAs, Roth IRA or traditional IRA, capital gains and losses, education savings accounts. These are all great tax deductions that I hope everyone takes advantage of. If you need a tax advisor, or excuse me, an advisor for these different transactions, please let me know. If you need someone to help you with business taxes, please let me know, or personal taxes as well. I do have someone that's great and that knows both sides of it. Any educational expenses for your household members or career mobility, upward mobility, professional development, some of those do apply for us. And like we talked about for the medical expenses for your business, you get write offs for that as well. And then if you, for your personal, you get different write offs for health savings accounts, long term care accounts through your employers, or if you took out a personal one. Co-pays, prescriptions, medical fees, mileage to and from the doctor. You saw in the video that there's a calculations for mileage. There is a mileage calculation that business owners probably don't use as much. And I think it would behoove you to go ahead and do that, as well as your gas expenses. Just write, when you're getting your gas, go ahead and write the mileage down, right where you went, the date, and it was for a business meeting, and just file it with your receipts. Um, Major appliances, home improvement upgrades to improve efficiency usage. We talked about that a little bit. And then any professional services, consultation fees, medical, tax preparation, medical, lawyer fees. So those are some of the standard things that you can write off for personal. And then, of course, we talked about the different things you can write off for business that I don't think individuals knew about. So I wanted to, go over some of those. And, the best way is really in the video, he discussed having a budget. And I showed you a few different mechanisms to use for the budget, different softwares you can use, and then Excel and some great tools that you can use for your budgeting. But really understanding your budget and writing all these things out, it's going to help you when you're completing your taxes, as well as you'll be able to print out, some of those financial statements we talked about, that we're going to look at some of those in the video and go over them. And so that way, when you see, these different statements, and you'll see these different expenses on your line items for your statements, you'll be able to identify them and understand where, the money is going when you look at some of your business tax deductions. So it'll be a little bit easier for you to do your taxes, and you'll have everything in one file, one section. I suggest, breaking that out, utilizing your bank statements, utilizing the different software, and printing out those statements. And each month, your accounts normally for different software that you have will send you a summary, right? And so you can use some of those and upload them. You can export them as well, import them. And it's a great tool to help you with budgeting, and really being able to see where some of these costs are going. And that will help you understanding, okay, what is the type of profit calculations that I need? What are the taxes I'm going to incur? What are some of these expenses that are going to come up for my business that I need to prepare for? Whether they're going to be annually or securely, or whether they're just going to be seasonally, it's important for you to understand and know what those are exactly and not guess. So that's why he talks about in the video why it's important to have a budget for your business. Without that budget, he mentioned we won't be able to know what your sales goals are. We won't be able to know when you met those sales goals. You will need to forecast them as well. And so, not having an understanding of your target, of what target we need to meet, is very confusing for your workforce, right? It helps them see when you identify targets and goals and you relay those to your workforce. It gives them that intrinsic motivation to understand and connect how their work is directly related to the business goals and objectives. And a lot of times you'll see the productivity go up within your workforce as well with you when you start to see, hey, I'm understanding my budget. I know that this month I need to make a certain amount of projected sales. I need these leads converted, right? And so you can make changes each month as you go when you're reviewing your budgets to see how close you are to your targets, right? I know in the government, we always wanted to, we did our estimated budget and then our actual budgets, of course, we would monitor them very regularly, weekly. And we would see, or bi-weekly, because it depends on when invoices ran through the system and when payments were sent out to vendors, and as well as when employees were paid. So we can get a fluctuation to understand where our money is going, what percentage, and you watched in the video, he talked about what percentage of your company um, money is going to, production, what part percentage is going to marketing, what percentage is going to payroll. And so you'll see how those breakdowns will help you when you're tracking the actual versus estimated costs. And you can make those adjustments and know, okay, maybe we need to change our product line. Maybe we need to charge a little bit more for this particular product because of the type of inventory or specialty contents that it contains, or the clientele, the product market demand has increased, and we need to reduce supply and increase a price, right, point so that we can use that, capitalize on that. And then our 80/20s look at, what is making us the most money, and we'll put more energy into advertising those services or products versus these certain products. I know for me, I saw a shift and students wanting to take more technical courses. And so now a lot of my government contracts and county contracts are for training, technical training. And the reason why we know is because COVID, and people are pivoting and using the skills that they've had. They may had to transition to a different career. They may have lost their job. They may have changed, altogether, and they wanted to improve their skills as well as make themselves more marketable and pivot those skills into another position or maybe into a greater opportunity for them. So that's the trend that we see. And those are some things you do have to track. Excuse me. Sorry. So those are some of the things you will have to track going forward. Okay. All right. So let's watch this video and we're going to talk a little bit about, excuse me, financial statements. Hold on one second.